I'm Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, where we look at what happened in the market during the last week and how we can plan for a better trade for the next day. Remember, this is analysis for August 1st, 2022, and we'll be looking at Nifty, Banknifty, stock and option strategies, and a lot more, right? So without wasting time, let's get into the action. So here's the weekly chart that you see here, wide range bullish candle. That's Nifty on the left side and Banknifty on the left side. Both are wide range weekly bullish candles that you see there. And daily you can see that it's a gap up. For the last 3 days it's a gap up, pro gaps, which are clearly bullish. And Banknifty also, you had a gap up and for 2 days, and then finally some profit booking, and then a hammer pattern is formed in the daily candles, right? Another view on the investing.com site, you can see that it's clearly above all the moving averages, including the 200 DMA. That's Nifty, and right side Banknifty also very clearly above the 200 DMA, and price is walking on the bands, right? So all moving averages conquered, and we will look at the resistance on the upside. It's very close to a gap resistance, and we have multiple previous swing high resistances on the upside on the Banknifty as well. We'll be looking at later in the support resistance section, right? So let's get a brief. It's 432 points, 2.6% up, green candle, white bullish. That's 1,000 points in 2 weeks is what happened in Nifty. Clear bullishness. Banknifty 2% up last week, 736 points, and it's clearly wide range bullish and above weekly DMAs 20 and 50 both, right? And it's about 20 and 50 DMAs, WMAs actually, weekly moving averages on Nifty as well, right? On the daily time frames, you can see already seen that 1.3% up, but Nifty is ended up flat, kind of 30.30% up and forming a red candle, right? So it had moved up and then closed below it, so it's a red candle. So that's Friday. So the bounce up, really, if you look at it, it's 13 to 17% that has happened in the indexes, right? And all eyes are now on the next resistance on the upside. We'll be seeing that later. Look at the Bollinger Bands. This is what it says. Clearly walking on the bands. It's clear bullishness. Upside expansion on both sides on the Nifty and the Banknifty. Support resistance levels, make a note of this, right? All these yellows are all gaps, either resistance or supports. So this gap on immediately on top is 17,458. That's the resistance of the gap. Let's speak of these support resistances. The first support would be 70,000, 7,050 first, and if that's breached, then 16,800, 16,900. If that is breached and it goes 16,700, 16,750, then that's breached 16,550 to 650, and then it goes to the next gaps support on the downside, 16,350, 16,500, and then below that you have 16,000 nearby levels, right? 1650 to 16,200 support zones. Similar to the resistance upside, 17,200 to 17,300, 17,300 to 17,400 above that, so it's a gap zone. So resistance acting as a resistance on the upside, 17,500 to 17,600, and then you have 17,800, 850 zones on the upside resistances, right? Going on, and 18,000 rounding number is the resistance on the upside, right? Definitely. Banknifty, similarly, if you see the for support would be at 36,900, 37,500 for the natural 3 days tracement levels. Below that you have support 36,800, 37,000 major support zone. That's breached, then 36,100, 36,600. Then that's breached, then another support that is also having a gap. 35,600 to 35,900 zone, and then 35,000 nearby zones. Similarly, resistance on the upside, 37,700 to 37,800. 38,000 is the major resistance, and then 38,350, 38,500, and then 38,900, 39,100. So that's it. So 38,759 is a previous swing high, then 37,988, that's near to 38,000 is a previous swing high, and then gap supports are seen below at 36,808, and then gap support at 35,768. These are levels, the gap support levels and the previous swing highs on the Banknifty is to be made note of. Similarly, 17,458 the gap resistance on the upside, gap support is 16,948, and then 16,554, and then 16,360 and 16,067. So also these are the strong gap supports and gap resistance that you see on the Nifty. Going on, looking at the momentum, you can clearly see that this is a Nifty, and that's the weekly, and this is the daily, right? Banknifty weekly and daily on the right side. So you can see that momentum is rising, but not at bullish zones on the medium term. On daily time frame, it's a divergence target that is met, and then it's clear a rising momentum. Same Banknifty also rising momentum, but both on the weekly medium term, it is at to close the bullish on so far as I-16. Right? So that's the momentum. Look at the trends, you can clearly see that Nifty is daily and weekly. So you see that it's all bullish. Both time frames are bullish, crossed over to bullish on the medium term also. And Nifty also both time frames bullish, but in the it is weak strength on the trend strength on medium term, but strong rising uptrend in the trend on the short term. Right. So let's say wrap up of levels already met the Nifty bullish reverse levels of the last week. So that's already met. Now the levels are seen as if now. So clear bullish is the momentum in the trend. Moving on to the volatility, you can see that it's another 1% cool off 16.5. So far away from the 20. But still you have to be cautious because uncertainties are still there and it can spike up back to the 20 plus levels. But as of now it is cooled off, you can clearly see it in the daily charts. The big cool off of the weeks that has happened, right? More the open interest, Nifty is short covering rally that has happened, and Banknifty also futures OI is indicating that it's a short covering build up that has happened on Friday. So the next expiry weekly August 4th, the maximum and maximum put and call rating levels you can see in the next chart. Right before that, PCR is bullish, 0.93 on Banknifty, 1.27 on Nifty. So that's clear bullishness. Look at this levels. So there's it's clearly bullish because all the highest number of puts is what is dominating. But Banknifty is not that clearly bullish because there is some huge resistance that is written on the Banknifty at the 38,000 nearby levels, right? So look at the levels, right? 17,000 and 7,600 is the range that we have, right? 4 days ahead of the expiry. Right? Next, that's where the highest put writing is seen. Then highest put and call writing is seen. Right? Now the next level of highest put writing is seen at 6,900 and 18,000 levels, right? Put and call writing. This is support and resistances. 37,000 and 38,000 is the zone where the highest support and resistance is there. Put and call writing is seen on the Banknifty. 37,500 and 38,000 is the next second level of highest put and call writing that is seen. So futures OI and PCR we already seen it's bullish. Moving on to the sectorial watch. What you see there is all the sectors are performed last week except the auto sector, which was leading the rally, and last week autos closed slightly near to 1% down. But otherwise all other sectors caught up, 3.8% caught up IT. Bullish definitely. On medium term it is not bullish yet, so we'll have to wait. Metal bullish definitely. So all the indices are now in the bullish zones in the short term. Right. Super bullishness is still in the auto on the FMCG only. Right. IT has recovered, metal has recovered. Pharma is catching up, and reality is also catching up because weekly is still sideways. Right. But FMCG and auto is already clear bullishness. Right. IT, metal, pharma, reality is still catching up on the medium term. Right. So that's the view is very much clear. Which sectors are bullish is very much clear. These are the charts that we are talking about, right? So it's a clear reversal of the Nifty on the IT. We can see that it has taken a support and then a bullish divergence and bounce up for 2 weeks. Metal clear bounce up of 3-4 weeks now, right? It has got into the same zone where it was consolidating. Auto is clearly breaking out but ended up with a hammer, and pharma is also reversing and then trying to move up, but still momentum is in the sideways. But auto and FMCG is clearly bullish on the momentum side on the medium term. So you can see that FMCG also is breaking out. Right? Reality is also reversing after taking a support, and momentum is still catching up in the medium term basis. We have to wait for that. So FMCG, auto leaders running the rally, and all other sectors are bullish on the short term and recovering. Index heavy HDFC clearly bouncing up from the support zone. Clear 2 weeks of bounce up. HDFC face at a resistance zone, but good recovery, momentum rising on HDFC twins both on the medium term, but not in the bullish zones. But that support seems to be working for the HDFC Bank, and support and the prices are now at a resistance level. Let us see whether HDFC would be able to take it out or not. Lens has also taken a bounce at the support zone neckline of the cup and handle and then showing some green patterns, but momentum is still sideways and flat. So Lens also hit all the three heavyweights are definitely having good momentum and heading towards bullishness, but still in the sideways on the medium term. So short term, it's already turned to bullish zones. Next is Infosys, IT stock, and TCS. Both have shown clear reversals and wide range bullish channel, and the bullish divergence has clearly worked on the momentum. So that's clearly visible. IT is also done well. ICICI Bank is trading star, but remember you can take the trade only after this resistance zone is breaching all-time high. Also, it's very close by, so you have to be cautious. But clear reversal and up move is seen. Momentum has already climbed into the bullish zones. Kodak Bank is still hovering around this range, and there is a small body candle that has happened on a weekly basis. Momentum is still sideways and dropping. So it has been zigzagging in this zone as usual. So ICICI Bank is a performer, and IT stocks are also performing last week. Banks are recovering, showing good recovery, but some more to go before it turns to be clearly medium term bullish, right? Moving on, bullish participation. Yeah, probably that is right. FIs already is selling, but net sellers there were 150 crores last week, but there has turned to be 240 crores of net buyers last week. So the moment the FIs are ready the selling itself will make the market move up, because retail participation also will come in a lot. So that's the picture of the FIs. So there is some last week they were net buyers, but FIs this week slightly well short of buying, but still very little of selling from them. So institutional participation is good. Couple of markets, if you see US markets are 3 to 5% up. When it comes to Dow Jones, Nasdaq, S&P 500, all of these indices have moved to 3 to 5%. And let's look at the charts. Dow Jones, what it has done is it is clear recovery. You can see 3-4 weeks of pickup move has happened. Momentum is rising mode, but in the medium term weekly basis, if you look at it is still not into the bullish zones of RSI about 60. The crossover is just about to happen into the bullish zones on the ATX in the medium term. So Nasdaq also is showing a good recovery, and S&P 500 also good recovery. Seen momentum is rising, and so good recovery is seen, but you have resistance from where it had slipped down. That is very close by, so you have to be cautious on that. That's the US markets. Dollar index, if you see, it's a cup and handle. It's a rounding pattern breakout that has happened, and then a reversal after very close by the 20-year high. It has it has been moving down 0.7% last week also. That's a good reversal as seen. And dollar index is close to 105.8. That's what I see, 105.8. That's a good pullback that has happened, right? And so USD/INR is not directly correlated with that, but there is some correlation that is there. It's a 0.6% down last week, right? That's what USD/INR you can see. So after it has hit the all-time high of 80 plus levels, it is pulled back, and 0.6% down, and 79.3. So it's still rupee is still weak, right? That's for sure. But definitely it's a relief that it is retraced a lot. Now coming to the crude oil, 3% up, and look at it. So crude oil has retraced, but it is in 20% plus of retracement has happened, and is on the edge of it, trend line channel, and set a support zone. Now going below this would be a challenge. Probably it may consolidate here, but definitely it's below 100 itself is a relief, at least for some period of time. Gold is taking the support and then trying to bounce up, but just two major resistance from where it had slipped down. Momentum is climbing back to the sideways from the gold, right? So that's a wrap up of global markets. So in a nutshell, US markets are 20 to 35% of earlier reversals. Is showing some of pullback. Is now showing some reversal attempts. Dollar is showing some relief pullback. So USD/INR also rupee is still weak, but some retracement from the 80 plus levels has happened. Crude oil is cooled off, so some relief, but it's at the support zone. So it's overall it's positive, we can say. Right? Global markets we have already seen. So global markets, US markets, and dollar is positive. Crude also is positive for all. Two stock picks, that's Trend. Trend is a Tata company. It's a retail arm, and FMCG is doing good. So Standard Oil is doing good, and it's in a trend line channel on the weekly basis. Momentum has just climbed to the RSI 60 plus zones, right? And trend line some more time before it goes up to the trend line top, right? And definitely there is a lot of space for further up move on the trend, but remember there is an all-time high, and it's a major resistance zone where it was reversed earlier, so you have to be cautious, but there is still scope for it to move up. So swing trades, right? Because the reasons are price pattern, trend line up move is what is happening, momentum is rising in the bullish ones, trend is already bullish on the medium term and short term both. ICICI Bank is another pick. Bollinger Bands expanding and walking on the band is happening, but you have to be very cautious. Entry has been made only about 836, which is all-time high levels. Not all-time high, just the previous resistance zone. If that is cleared and the green close is there about, then we can enter. Momentum is bullish, trend is bullish, price is bullish, Bollinger Band is rising, volumes are good. So overall, looks good for your ICICI Bank long trade. Trend Limited and ICICI Bank, two longs. Now the index strategy counter spread is what you see here. 4th August 17400 call sell, and 11th August 17700 call buying, right? So what you see there. So it's giving it's a calendar spread, not a double diagonal, but more or less works the same way. Benefits from the volatility spike, good POP, and good range also is there, right? The assumption is that there will be some resistance near to 17500. So it will not close above that is what happening, because good rally has happened. Now some consolidation pullback resistance can be seen at the gap resistance that's there above, right? Now POP is good, yeah. So overall it should work. It's a counter sprint, and it's will be distributed. One side is protected. The downside, if market moves, there is no issue. Upside, there will be issue. So wrap up. It's mild bullishness. Reasons: 13 to 70% of up moves happened now. Probably the final lap of taking out the previous swing highs and resistances. Few more is there left. If that is also clear, then it's a final lap. So saying reasons for that is like India VIX is bullish, hold up a lot. PCR is bullish, futures wise short covering, expansion, FII reduced buying, Bollinger Bands expansion, right? Greater than median. All of them indicates a short-term bullishness that is there, right? Now resistances are seen. That is there in the previous swing highs, and gap resistance are there. So while we say that it's clearly bullish, it's in the final lap. Remember that. So that final lap is also very important, right? So there is always a chance that it can come back also. So the levels are cautiously kept in mind. We'll be looking at the levels downside. So overall, my view is mild bullishness that is there. US markets are positive, right? This I forgot to update this time also. US markets industry dragonfly is long back, 3 weeks back. Data is not updated, but US back we have already seen. Still done decent recovery is seen. Now recession fears are there, or uncertainties are there, inflation, Fed, interest rate, RBI, repo rate, all of these Ukraine crisis, everything is still there, and so anytime it can spike back. Now 17450 and 38761 indices has to be looked upon. First few factors is that there is strength in the market. Look at this miraculous 17% recovery in the Banknifty that happened just a matter of 2 weeks, 2 or 3 weeks, right? So that's the power of the retail confidence in the market, in the markets, right? But uncertainty is still there. Anything can happen. Versus could come in. Now quality stocks, of course, has to be protected, right? Come out of non-quality stocks, and quality stocks hedge your positions, and then use strategies like covered call, and then invest in SIP mode, use cash secured puts, right? All of this has to be applied. Overnight risk, do not take that, because anything can happen. All of these bullishness can melt out in a fraction of a second. So keep a note of all these levels, and you have to be cautious on the sentiment turning against you anytime. But as of now, it's clear bullishness. Retail confidence is projecting out, and charts are saying that, price pattern is saying that, all indicators and momentum trend, everything is saying that. So go with the trend, but same time be cautious, right? There are reasons to be cautious because we are in the final lap. Hope it helps you to frame your market view, and if it helps you in your market analysis in some way, consider hitting the share button, subscribe, put in comments and feedback. And thanks for watching. Happy learning, happy trading. Bye.